Here's 14 years of brutally honest trading lessons in 30 minutes.
I've been trading for 14 years, made $4.5 million in profit. 2.5 million of that I made this year in one payout, which was the largest payout in prop firm history. And I'm going to compress 14 years of brutal trading lessons into this one video. All right, so lesson number one is overcomplicating strategies. The number one reason 90% of traders fail has nothing to do with strategy. Nearly every profitable trader I know, including myself, started the same way, drowning in indicators, trying every new system, convinced that complexity equals profits. And I spent my first 3 years collecting strategies like Pokemon cards. The result, though, was consistent losses and complete confusion. And here's what I learned the hard way. So, more tools create more confusion and not clarity. I once had dozens of indicators on my chart and I couldn't even see price. So the majority of indicators out there are just based on price itself. So what I had to learn over time was if I just learned how to read price without the indicators, then I didn't need the indicator. Price itself is going to tell you where the markets are going to go. It's giving you the story. And a lot of the indicators out there are just lagging derivatives of price. You guys can ask any profitable trader out there and they'll tell you the same thing, that less is more. So the strategy that made me the most amount of money has zero indicators, just a couple lines on a chart, a couple rectangles, maybe a Fibonacci tool, and just key levels where I expect the markets to react from.
I agree with this. And let me pull up my charts here. When I look at my charts, like I have 3 moving averages and order blocks. By the way, you can make your charts look exactly the same as mine. We have a script inside of our Discord, so you can use the free trading view account and use our free script, and your charts will look exactly the same as mine. I like to use ATR for position sizing, as well as knowing where I'm going to get out and where I'm going to roll. But at the end of the day, like I really like the idea of keeping my charts clean. Now, some people could say that outlier is additional complexity, and it is by design. We're trying to give you additional data that you can't read in the chart, right? So take that as you may, figure out what works for you and roll with that. But you don't have to make things super complex. But you do need a full, well-rounded trading strategy, right? Trading strategy involves entries, which are the sexy part. That's what everybody cares about. It involves exits, which I don't understand why people don't seem to care about that, but that is probably the most important thing you can do is figure out your best exits. And then position sizing, trading psychology, there's all kinds of different things that you need to add into your trading plan, especially those like one-off things like earnings, right? What are you going to do at earnings? What are you going to do if a stock gaps down against you, right? What are you going to do if this or that happens? A lot of this you only learn through experience because you're like, ooh, I probably should have included that in my trading plan. But to that point, I like simple as well, at least on my charts.
Market is already telling you everything that you need to know if you stop drowning in the noise. And this isn't just theory, this is what actually works after 14 years of trial and error. Now, you guys have probably heard everybody talking about system hopping when you first get into the markets. I want to put emphasis on the fact that you only need to master one before you try and learn another. And I didn't become profitable until I focused on just one strategy. You guys can go online right now and find 10 different strategies taught by 20 different people, and they're all teaching it differently. The key is that you stick with one long enough to find out if it actually has an edge or not.
Oh, that's a great point too. Because so many people strategy hop. Oh man, is that real? I did it too. Don't stress on that, right? You know, this week you're a day trader. Next week you're a swing trader. The week after that you're a futures trader, and then you're an options trader, and then you sell options, and then you buy options, right? Become a master of one, right? Bruce Lee has a quote something like, "I don't fear the man who knows 10,000 kicks. I fear the man who's mastered one kick 10,000 times." Something like that. To that point, you need to become an expert in one strategy, one type of trading, and just refine here and there until you found the greatest edge that you possibly can.
And even after all that, the biggest lever that you can pull when it comes to profitability is not your strategy. It's your risk management, your trade management, and your psychology. You could have a below average strategy, but if you have really great risk management, really great trade management, and really great psychology, you can turn that average strategy into a winner. Now, is it boring? Maybe. But is it profitable? Absolutely. The traders who commit to one approach always outperform the system hoppers. But even with the perfect, simple strategy, most traders still fail because of this one critical mistake that has nothing to do with entries. If you want to see exactly what my simple, high probability setups look like in real time, I put together a free black book with my top 3 entry models. These are the exact strategies I use to break the world record payout at Apex and make millions of dollars. And the best part is, it's completely free. It's in the description below. Grab it when you get a chance. But here's the thing, even with perfect entries, most traders still fail because of this one critical mistake, which is lesson number 2, poor risk management and stop loss discipline. This single rule has saved me over $100,000 in losses. Most traders think risk management is boring until they blow their account. I learned this lesson when I lost 60% of my capital in 1 week because I knew the market would turn around. Spoiler alert, it didn't. And every blown account has the same story: ignored risk management. So here's the math that changed everything. So you never want to risk more than 1 to 2% of your capital per trade. And everybody always talks about this.
So to that point, whenever I do my position sizing, hold tight, I'll pull up my position sizing spreadsheet real quick, which will be changing, by the way. Whenever I do my position sizing spreadsheet, right, I'm putting in a 7% risk. Now, that's way more than 1 to 2%. I agree with you on this. However, when we actually deep dive in and say, where am I actually planning to get out? 1.75% of risk is where I actually will be getting out. This is my absolute worst case. Things went sideways. I broke something. This is the reality, right? And a lot of times it's way less than that. So where I'm going with that is you can actually have a way bigger position size than you think you can, as long as you understand that you're going to get out before that max risk is ever hit. I'm a huge believer in that.
But why is that? So for me, position size matters way more than your entry timing and strategy. Trading is just a game of numbers, and you need to play the game as it's been designed. It's probably the only gambling-esque game where you can set your own odds. So if you're aiming for a 1 to 2 or a 1 to 3, you only need to have a 30 to 40% win rate in order to become profitable. But
And that's funny because I saw someone in the Discord yesterday saying, oh, a 50% win rate. So just a coin flip, right? You're exactly right. Go flip some coins and see how that turns out. What you want to do is you want to find an edge. There are times where your edge has a pretty low win rate, but has a very high expectancy because your winners are so much bigger than your losers. And when you do that, you don't need a giant win rate. Mark Minervini, one of my mentors, won the US Investing Championship twice with a 40% win rate. So worse than 50-50, worse than flipping coins.
let's say if you're risking more than 1 or 2% of your account on that specific trade, if you go into a drawdown, it's going to take you a long time to get out of. And not only that, but if you lose 50% of your account, you now have to make 100% to get back to break even.
For sure. I have a slide on this. I want to show it real quick. Hold tight. Hold tight. Let me go to that slide. This slide. A 10% loss requires 11% to get back to break even. 20% loss requires a 25% gain to get back even. And this is where people's brains break. A 50% loss requires a 100% gain to get back even. I know people's brains break here because I've mentioned it before and they don't get it. They don't get it here. If you have a $100 stock that goes down by 50%, you're now at $50, right? We can all agree to that. But to get back to 100, it's not 50% higher. 50% higher on $50 is 75. You have to go 100% higher from 50 to $100 to actually get back to break even. It's real. By the way, Mr. Dave is totally right. 4.0 is so sexy. And it is math, right? I love math. Do you guys love math? Tell me in the chat. If you love math, type math in the chat. If you love anything besides math, type outlier in the chat.
Now, if you guys have been following me for a while, there's something that I like to do just to visualize my capital and my bankroll, and that's having poker chips on my desk. So with the 1 to 2% rule, let's say if I only want to draw down max 20 to 25% of my account, that means I only have 20 to 25 chips that I'm allowed to trade with. Now, you will go through losing streaks and you will have periods where you're going to lose 3, 4, maybe 5 trades in a row. But let's say if you started risking more than one.
And that sucks. Now, when a lot of people lose 3, 4, 5 trades in a row, they think something is wrong and they decide they have to strategy hop. The way that I think you can get around that is just understand you're going to have losing streaks. You're going to have winning streaks. Let's think of it this way. If you had a winning streak and you won 3, 4, 5 trades in a row, would you immediately strategy hop? No. But people do that with a losing streak because they can't understand that the distribution, right? When your wins come and when your losers come, that part is random. That's crazy. But that part is random. You could have 27 losing trades in a row, 3 winners in a row, and it pay for all the 27 losers. It's very possible. You could go back and forth, wins and loss, wins and loss, wins and loss. The distribution of when you get the win and when you get the loss is random. Yet some people get 3 losers in a row and think, "Oh, I've done everything wrong. I'm the worst. I'm a failure." Exactly. It's just a losing game. That is a real reality in trading.
1 to 2%, and now your chips are cut in half essentially. And instead of having 20 to 25 chips, you now only have 10. Now, if you've ever been to a casino or you're just trying to manage your bankroll, you know how stressful it can be once your chips start dwindling. As an amateur, everything changes about your trading. You start making poor decisions, you start trying to double down and make it back. And in general, it's just not a good place to be in. Now, compare that to another player at the table who has a large stack of chips. They can make proper decisions because they honestly don't care about that next hand that they might lose. And it's the same thing with position sizing. If you're taking positions and you're finding yourself making poor decisions or you feel like you're about to make poor decisions, then trade smaller. You're not quite ready yet to be trading the bigger sizes. So just remember that your capital is finite and you need to protect it like your life depends on it.
So is your mental capital. Your mental capital is finite too. How many times have you put on a trade and you couldn't sleep? I'll give you a great personal story about this. I remember I was putting my son Elliot to bed. This was years ago, and I was upstairs at our house. And I remember putting him to bed, and I had my full portfolio in, and this is when I was selling options at the time. And I remember walking out of his room. Oh, it hits me like I can feel all the goosebumps right now coming back because I remember it hitting me like a train. Cold sweat, just could not even function. Like if the market crashed tomorrow, I am bankrupt. I don't know why. It was the universe speaking to me, but I was way too big. I was way too big on my positions. I did not have my position sizing nailed down. I did not have my risk management in place. And I'll never forget how that felt, that overwhelming sense of dread and cold sweats that I had because I was trading way too big. That's real. And it's probably happening to you too. Maybe not in that regard, but probably a similar situation.
Because it does. All right, the next bit on risk management is you need to honor your stops without hesitation. You need to always remind yourself that you're paying the stop loss to do a job. And as humans, the amateur trader, for some reason, loves to intervene with that and they love to exit manually because they can't handle the emotions of their stop loss being hit. Every trade that I go into, I just assume that that money has already left my account in the form of a business expense. And if the stop loss hasn't been hit yet, I tend to do nothing. So, how many of you guys have been in a trade where you're up a little bit?
That's interesting. I don't look at it as if the money's already gone. I look at it as if it's a business investment, right? Imagine that you're a sophisticated investor like myself, and you invest in different things, right? Maybe you've invested in a house, maybe you've invested in Pokemon cards, maybe you've invested in antique things, whatever the case is. Maybe you've made an investment along the way. Some of these investments will make money. Some of these investments will not. You'll lose money. Um, so that's the way I look at it, right? Every trade is a business investment, and not all of the business investments are going to work out.
The market starts retracing on you a little bit. It starts getting really close to your stop loss. And instead of honoring your stop loss, you exit manually only to see the trade start moving your direction again. Whereas if you didn't do anything and didn't touch your stop loss at all, that market might turn around and trade towards your target again. But because you're making an emotional decision based on your P&L and not based on the chart itself, you have a point of invalidation. The trade is still valid until
I like that. I like that a lot. We're going to pick a stock at random. Okay. AMD. If you bought AMD and let's say, okay, we're going to use this candle just for posterity's sake, for no other reason than as an example. Let's say you bought AMD right here because you're like, I got to buy the dip. It's going to go back up. It has to go back up. It should go back up. And you bought it right here at the bottom of the candle. Okay. If the next day you see a close below your stop, let's make the stop orange. The market has just told you it's not going to work out. Most people can't handle that. What we do is not normal. To be successful in the market is not normal. It's the truth. The truth hurts really, really bad. But to be successful in trading stocks, you have to do what 90% of people cannot do. When their stop is hit, and I wanted to use this as an example. When their stop is hit, they'll be like, oh, that's okay. And I did this too for years. So don't think I don't know what I'm talking about. When their stop is hit, they'll say, it's okay. I'll give it another dollar. I'll give it another 50 cents. I'll give it another day and a half to figure it out. Right. And before you know it, you're just digging your hole deeper and deeper and deeper and deeper. You're making your losses worse and worse and worse because you're afraid it's going to pop back up. The dirty hippie stacker says, I did exactly that. It hurt, but I took the L and moved on. Right. At the end of the day, Mark Minervini had this, one of my mentors has this post right here. Knowing you should get out of a stock when it does this, right? When it goes down against you, it has proven to you that, hear me out. The stock has proven to you that your trade idea wasn't right at that time. The data has already shown it's not working. But you don't take your loss right then because you're afraid. You're literally afraid. You're the itty bitty baby boy who's scared to take the loss because you're afraid it's going to go up. But what actually happens a lot of the time is you already have had your trade idea invalidated. The data has shown you the other side that it's not going to work out. And you keep holding, hoping, and praying as it continues to go down. This is the reality. This is what happens to 90% of people. It's okay to take the loss. In fact, there's no shame in losing money on a trade, but to hold on to a loss and let it get bigger or even worse, buy more is amateurish and self-destructive. Consider yourself a portfolio manager. Don't think of this as gambling. Don't think of this as a hobby. If you are putting your money at risk in the market, you are now a portfolio manager. Treat your account as such. A portfolio manager would know exactly what they're going to do.
It takes out your stop loss. So having a logical stop loss in a place where the trade is no longer valid, right? Maybe it's below a swing low or above a swing high if you're short. Until the market trades to that level, your trade is still valid. But again, the amateur traders will exit their trade as it's approaching their stop loss, only to see the market turn around and run to their target. So learn to stop making emotional decisions based on the stop loss, based on the P&L, and just let the market do what it has to do. It's going to wiggle around. The markets don't move in a straight line, and you can't control what the market's going to do. So the important thing is that you have a plan going into the trade, and you need to follow that plan religiously. There's absolutely no exceptions to this. Once you can master this, I guarantee you will find better results in your trading. All right, so let's talk about the different risk rules for funded accounts versus personal accounts. Now,
Okay, we're going to skip this section. Now, the reason being is I am not a huge proponent. In fact, I am a what is the word? I'm a detractor for funded accounts. Reason being, that's not your money. It's just not. Right? A funded account is where you have gone in, you've taken you've paid you've paid for tests. B, you're trading money that's not your money. And C, they have the right to never pay you a dime. Do not, under any circumstance, in my opinion, use a funded account service type thing. Just don't even let that cross your mind. Build your account up using your skills, using your money, and then nobody can take that from you. That is your account, except for the part that you got to give to Uncle Sam. Don't do funded accounts because you lose control. Focus in on creating your best system. And yeah, it may take you a while to go from $10,000 to $100,000. But Chris, I want to trade $100,000 right away. Okay, I get it. Who doesn't? But take this time to get all of your stuff in order, to figure out exactly what you're doing, and then save the mess out of your paychecks, save the mess out of your birthday money, save the mess out of your grandma's inheritance, whatever, to get to that 100,000. So you are in total control of your money and you're not reliant on anybody else. It's just my opinion. Just my opinion. We're going to skip forward to here.
I once lost $12,000 in 20 minutes because of this one emotion. The revenge trading cycle destroyed my first, 5, 10 accounts, but the simple journaling trick I discovered changed everything. Here's the brutal truth. Your biggest enemy isn't the market. It's the person staring back at you in the mirror. Every
Bro, that's totally true. But also, I learned this from Mark Minervini. I've talked about Mark a lot today. I actually had to do this to myself earlier this year in May, right before I had my biggest week ever in the history of time. It was awesome. I made 30% of my account in 4 days. It was the most glorious profit taking I've ever done in my entire life. Um, but before I did that, I actually had to sit down in front of the mirror and have a conversation with myself. You can do this. You've waited your entire life to do this. You know exactly what you're going to do in any situation. We're not going to set any expectations on these trades, but we're just going to let the market give us what it's going to give us. Mark Minervini has something very similar to that. He basically says that he could F up his account at any time. Nobody else has the ability to F up his account. He and he alone is in control of that account. Another reason why you don't want to be a prop trader. He and he alone is in control of this account. So anything that happens is due to what he decided to do at that time. So he's going to make sure that he makes the best decisions possible. This is called having agency over yourself. I worked with a trading psychologist for years. You need to have agency to say, everything that happens in the market is going to happen because I let it happen. Because you can choose at any moment to get out of the trade. Any single moment in time, you can choose to get out of the trade.
trader I've mentored has the same battle, and you're not alone in this struggle. One bad trade leads to 10 worse ones, and you lose $500, so you risk $1,000 to get it back, and then you lose that, so you risk $2,000, and before you know it, you've turned a small loss into account suicide. Trust me, I've been there. It's ugly. And I'm sharing this embarrassing moment because I want you to avoid the same pain. So, revenge trading really is an ego problem. As humans and in an industry where it's mostly male dominant, we just hate losing. We cannot take a loss and get off the screens. We want to prove to the market and everybody else that we're right about a specific trade, about some specific analysis. And I can tell you from the bottom of my heart, whenever I battled the market or I wanted to prove my friends wrong on a specific trade idea, it always came back and burned me because I took one loss on that idea and I needed to prove it to them and the market and myself that I'm right about this analysis. And really, it just leads to spiraling losses. The biggest
We're going to do another quote from Mark. Where's it at? Oh man, I don't know where that quote is at. Here we go. When you evolve to the point of always being patient and only taking quality trades, that means you're decided you're not in it for the action, but you're here to make money. You have sit out power. You never force trades. You're a pro. The reason I wanted to bring that one up is because let's say you are trying to revenge trade. Oh, I lost money on SoFi. I am the one guy in the world who lost money on SoFi. It's what it is. I don't care. But if I then went back and said, I'm going to get my money back out of SoFi, I'm going to show SoFi what's up, I'm going to backhand that guy so hard. No, no. SoFi don't care. The market don't care. The market's just doing what the market does. Okay. There's no sense in trying to go steal your money back. Like if you feel like SoFi stole the money from you, right? Just because you can doesn't mean you should. So to that point, right? Just follow your plan. And your plan, I know this sounds crazy. Your plan should include losing. Ooh, mind's blown. Your plan should include losing. Most people don't want to hear that. Your plan should include losing at least half the time. What? My plan should include losing at least half the time? Who is this random guy on the internet? How dare he say my plan should include losing? If your plan doesn't include losing, you're never going to be successful.
biggest advice I can give you as far as revenge trading is you just need to get comfortable with the losses. Unless you're comfortable with the losses, you're going to continue to revenge trade and it's going to continue to burn you. Now, another big problem with emotions is fear. And that's because you just can't accept the uncertainty that is the markets. Now, if you're a control freak, you're going to.
Oh, James has a great point. But what if the chart goes down, reverses, and goes back up? Why not get back in? By all means. By all means, if it fits your setup. In fact, we'll go to AMD again, and I'll show you a perfect example. Perfect example. exactly what you're talking about, right? AMD had been in this big, ugly, nasty downtrend for months and months and months. I was telling people, don't buy the dip, where other YouTubers were saying, this is the greatest investing opportunity ever in AMD, as it continued to scream down from 126 all the way down to the 70s. Okay. During this time, it did have the outlier trend template cross bullish. The 10 went over the 20. We can see it right here. Price went over the 50. That happened for 3 days. These 3 days right here. Okay. And then it went right back down. So it went from around, let's say, 104 up to 114 and then right back down to 104. That really did happen. That doesn't mean that you need to hold on to it as it goes down. No, because the trend just invalidated your thesis, and that's fine. Because just a few weeks later, after it bottomed and after it started to go back up, the 10 crossed over the 20, price closed over the 50 right here, and then it went on to double from that point. The same thing happened right here and right here. So yes, if it does start to go back up, by all means, that is absolutely the time you need to be following your plan. But that doesn't always mean it's going to work out. I think this is such a great example right here. I wanted to highlight that.
You're going to have a really, really hard time in the markets. Once you place the position, once you do the analysis, once you set your stop loss and take profit, there's absolutely nothing we can do about what that trade is going to do. It could go straight to your target. It could go sideways for a little bit. It could go straight to your stop loss.
That's why you should have no expectations, right? Once we're in the trade, we don't know what's going to happen. So where's my slide for expectations? Here. You don't need to have any expectation. Now, he's talking about profit targets. I disagree. I don't think you need to have profit targets. You need to just let that thing be wide open until you get to one of your exit signals. Just let it be wide open. Let it go as far as it can. But don't set any expectations, because let's say you give it $1 profit target. Oh, I'm going to give it $1 profit target. It runs up and hits that dollar in 5 minutes. There you go. But then it goes on to make another $100 without you, where you could have left it wide open without a profit target and just wait till you got your exit signal. But don't have any expectations.
But you can't control that. And that uncertainty creates fear. So part of the experience that you're going to gain as a trader, which I can't pass to you, I can only talk about it, is how you feel when you put on risk. Honestly, the best trades that you're ever going to have should feel effortless. You shouldn't be expending.
No freaking way. That's my word. Type effortless in the chat if you've heard me say that. I cannot believe he said that. Effortless. That is so fun. He must be watching our videos. That's exactly what I say. Good trading should, I cannot believe he said that. Good trading should feel effortless. Wow. That gives me goosebumps. I can't believe he said that.
Tons of mental capital trying to manage your positions. Again, the markets are going to do what they're going to do. You cannot force them to go to your target faster. So oftentimes the best thing to do is not even look at the trade once you're in the position. You shouldn't be trading for excitement. We're here to make money. And oftentimes,
he literally, I swear, he must watch our videos. He must watch our videos, because now he's starting to quote us. Now he's starting to quote what we just talked about, right? I'm not hearing it. Oh, there's not. I'm not in it for the action. Where is that slide at? How did I lose that slide that I was just showing a moment ago? There. Well, you're not in it for the action. You're not in it for the action. That's so funny. He just said that.
the market is going to do the heavy lifting. Once you're in the trade, just leave it alone and let the market tell you if you're right or wrong. Now, why do so many traders have such...
Well, let the market tell you, what do I say? Hold on. Now I've even forgotten what I say. What is the market telling us? This dude straight up watches our channel. There's no way he doesn't.
a hard time with their emotions? It's because they're not treating trading like an actual business. Okay, real businesses have real expenses. They're paying vendors, they're paying their employees, maybe they're paying for inventory, and they need all these things to be profitable. And just like that, in trading, we need expenses in order to become profitable. But we need to limit those expenses. Okay, if our expenses get out of control, and quote unquote, our losses get out of control, then we can no longer operate our business. So when you sit down and look at your books, if you have very large expenses, you have to find a way to cut those expenses. So that means not moving your stop losses when the trade's going against you. Maybe it's your position sizing. Maybe you're consistent for a very long time, and then you have one day or 1 week where you over leverage, and now all of a sudden you have this massive loss on your books. If you want to find consistency, keep the position sizing proper. Make sure you're not moving your stop losses wider, and make sure you're removing risk.
Exactly what I specifically this lesson exactly I learned from Larry Height. I think it's even in the video that I have on YouTube where I was talking or working with Larry Height, which is you are never allowed to move your stop loss down. If you've set your stop loss right here, never, ever, ever are you allowed to move it down. Never. It can only go up. If you're moving it down, you are breaking the rules of trading, which is pretty much what you just said.
If the trade is going in your favor. Okay, a major hack when it comes to emotions and trading is journaling. And I'm not talking about journaling just my trades, I'm talking about journaling my emotions. So it's very important once you're in the trade to write down how you actually feel.
Speaking of journaling, one of our OVTLYR University graduates, Dave, has a great journal if you want to use that. I personally don't journal my emotions. I just want to look at the data. But that's a great thing to do, especially if you're new in the market, is to write down what emotions you're feeling at the time because trading can be super emotional. I get that.
Okay, if the trade starts moving in your favor, how do I feel? If the trade starts moving against you, how do you feel? And what are the actions that you take when those emotions pop up? So you have these emotional triggers. And what happened to me for a long time was when I felt fearful about a trade and I moved my stop loss wider, right? Because I didn't want to take a loss. Or if I get super excited about a trade, maybe I scale in too heavily, right? These are all actions that are caused by my emotions. So those emotional triggers, once I could figure them out based on my journal, I stopped making those mistakes. And nowadays, I find so much more valuable data in my journaling about my emotions than I do from my actual trade data itself. So, this simple practice turned me from an emotional wreck into a mechanical trader. Now, even if you master your emotions, there's still this patience killer that destroys accounts faster than bad entries. And most traders don't even realize they're doing it, which is lesson number 4: lack of patience and discipline. The market rewards those who wait, but punishes those who
Bro watches our channel. I am convinced of this. I always say you could publish the rules in a newspaper, but nobody would follow them. The key is consistency and discipline. Just replace patience with what he just said.
chase. In my 14 years of trading, I've seen countless amateurs jump into trades too early or exit prematurely due to impatience. The market doesn't care about your bills, your timeline, or your need for action. It moves on its own schedule. And after 14 years, I can tell you with certainty that patience is the ultimate edge. Now, over trading will kill your account faster than bad entries. Some days there's no good setups, and that's okay. Getting paid to do nothing is still getting paid. But the
Are you serious right now?
The best traders are comfortable with boredom. Not only do you need patience in waiting for the right setup, but once you're in the trade, there's nothing we can do about that trade. We need to wait patiently to see if the market is going to agree with us or not. And I'm sure you guys have heard the saying before, but you don't want to destroy your account from death by a thousand cuts. And that's essentially what I did for many, many years. So I would enter an initial trade, and maybe if the market went against me, I would close that initial trade, enter in the opposite direction, and then I would get stopped out because it was going my initial direction. I would get back in it, and it was just back and forth, back and forth, back and forth. And I was taking these small paper cuts. They would never be 1 hour losses, but they would add up over time because I just didn't have the patience to let that initial position do its thing, right? The market's going to wiggle around. Right? The market does not go in a straight line. As much as we like to believe that it does, there's those very one-off trades where you enter and it goes straight to your take profit. But what about the trades where you enter and then the next 15-minute candle maybe goes in your direction, and the next 15-minute candle after that goes against you, and you're back at break even. And if you just exited or flipped bias, you would take a loss on that specific trade. Whereas if you just entered that first position and didn't do anything,
Dude, Manny, I will lose it if he says that. No way. But I don't want you guys to go report on him. I mean, like this is great content, and like legitimately, this got 232,000 views. So clearly, he knows the YouTube algorithms better than I do. I'm just putting that out there.
maybe by the end of the day, it's going to reach your take profit level. And this just came from realization where I was going back through my trades, and some of my trades I had were swing trades. Okay. So I planned to trade on the 4 hour time frame. But then every 15 minutes, I was changing my ideas, going back and forth. Once I was long, I would go short once the market went against me and it looked like it was about to turn around, only for the market to slowly drift higher and higher towards my target. And in that whole time period, maybe it was a 2 week swing trade, right? It took 2 weeks to get to that target. I was in 500 different trades, taking losses on every single direction. When if I just placed that one position and left it alone, did something else with my life, went
You mean, I swear, if he says go touch grass, I will. What will I do? I don't know what I'll do, but I'll do something.
outside, touched grass, went to
No freaking way did he just say touch grass. You can't be serious. I'm glad I didn't say something like eat my hat, because I would be like shoving this hat in my. Come on. Come on right now. He has to watch our channel. No way. No way. No way. No way. I don't believe this. You know what? Just for that, type hashtag outlier in the chat, and I'll just give something away on the stream right now. How's that sound? I will just give you something I cannot believe he just said. There's no way. He's saying exactly what we talk about all the time. Hashtag outlier. I'm gonna give something away. Hashtag out. Good gravy. This is not possible. I'm in literal shock because this guy absolutely watches our video. That is so funny. That is so funny. Okay, I'll give you guys just a minute to put hashtag outlier in the chat. I cannot, like, I'm like almost crying over here that this is so funny.
the beach, did anything other than stare at the chart, I would be a profitable trader. And every profitable trader I know has mastered the art of doing nothing. Now, your trade exits. Okay, everyone says to hold your winners and cut your losers, but most people do the opposite. We're wired to take small profits because it feels good and then hold on to losses, hoping they're going to turn around because we don't want to be wrong. So big winners are rare. So when you get one, you need to make sure you let it run. Now, I have this very simple rule. If I enter a trade where my stop loss is 1R and I'm targeting 3R, I do absolutely nothing to that trade unless it's up 1R at least. If it's trading towards my stop loss.
All right, I'm gonna give you guys like another moment or so. I will be giving something away. It'll be fun. It'll be the Wheel of Fortune over here. So go ahead and put hashtag outlier in the chat if you want to be considered. God, this is so funny.
I don't do anything because I have had trades where it's gotten very, very close to my stop loss, turn around and hit full TP. But that's because I am so comfortable with the risk that I put on and the exit that I'm trying to plan. So when it comes to my exit, I tend to do nothing. If it's under 1R profit, so let's say if you enter a trade and it's up half an R, I don't do anything.
Let's talk about ours real quick. For those of you who aren't familiar with it, let me remove drawings. Okay. I don't know if TradingView has this tool. I'm sure it does. Here we go. Long position. There we go. Let's say that you are risking $5, right? And then you are taking in this instance, you're looking for $15 as your profit. You're risking 5, that's 1R, one risk, and then getting 3R, 3 return. That's what he means by R's. By the way, put hashtag outlier in the chat.
Because I need to be able to have those winners pay for the losers. If you are not maximizing on the winning trades where you're getting 2, 3R, 4R multiples, okay, so your average loss should be, let's say 1R. Your average loss, $100. Your average win, however, should be $200, $300, $400, $500. As you guys can see here, this is my record over the past week. All my losses are extremely small, yet all my winners are a large multiple of that. So if I go on a losing streak, I could lose 5, 10 trades in a row and I would still be up. But even the most patient, disciplined trader can still fail because of these mental barriers that most people don't even know exist. And I'm about to show you how to overcome them.
Theo has a really good question. Is the R always $5 or we define it? No, in fact, I would put that as a multiple of ATR. So let's say your ATR is let's say your ATR is $3, right? Just for example. Oh my gosh, there we go. Let's say your ATR is $3, and then you could say, okay, I want to have three ATR win, so that'd be three times the $3. ATR, for those of you who aren't familiar, is the volatility of that stock, and it's going to change from stock to stock. It's even going to change from week to week in the same stock. Uh, so yeah, if you haven't typed in hashtag outlier in the chat, you should probably do so, like Nathaniel just did right now, and Robert just did right now. There we go.
Now, if you're serious about putting all this together into a complete system, I have something special for you. The Trading Apprentice is my
Okay, we're gonna skip forward a little bit. I'll tell you what, we'll end it there because this has already gone longer than I wanted it to. But I gotta say, this video is amazing. This video is super amazing. Go subscribe to JabeCap. Leave a comment down there and tell him that he is incredibly smart. Everything he says is totally true because you heard it from me first. The fact that he literally said the word effortless, the fact that he talked about going and touching grass, it's so funny to hear literally exactly the same words that I say come out of his mouth. And because of that, like David just put in, you need to put in hashtag outlier if you're going to win, because somebody's about to win right now. Let's see who the big winner is going to be. You know what? I'm feeling generous today because it's not my money. Let's go do two winners. Well, let's do two winners. Let's do two winners. Let's do two winners. All right. First winner is going to be. First winner is Andrew. What's up, dude? Congratulations to you, Andrew. Let's see what Andrew's going to win. Let's see what Andrew's going to win. Got to take a screenshot to send to April. Hold tight. Andrew, the way that you claim your prize, as you know, is by sending an email into support@outlier.com. All right, Andrew. Let's see what you're going to win today, my friend. Let's see what Andrew's going to win. Let's make this more bigger and let's see. Let's see what Andrew's going to win. Andrew's going to win $10 merch credit. Dude, go for it. There's all kinds of fun stuff you can get with a $10 merch credit. So Andrew gets a $10 merch credit. Congratulations to you, Andrew. All right, let's see who our next winner is. Let's see who our next winner is. By the way, I got to say, the fact that he said touch grass is allowing me to give you guys some stuff right now. So that just makes me happy. Congratulations to you, Andrew. Come on, Lambo. Come on, Lambo. All right, what's it gonna be? Who's the next winner? Hey, there's Andrew right there. There's Andrew and JPP. JPP is the second winner. Congratulations to you, JPP. All right, you two are big winners today. Let's see what JPP won. Let's see what JPP won. JPP won. Sit in cash and don't F up koozie. That sounds very good. I love me some koozie. So congratulations to JPP with the sit in cash and don't F up koozie. Congratulations to Andrew for his $10 merch credit. Dude, this was such a fun video today. I cannot believe that we ended up just saying the exact same words. Let me type this into April so I don't forget. Sit in cash and don't F up koozie for JPP. Again, for Andrew and JPP to claim your prize. And by the way, for those winners who have claimed their prizes in the past, do me a favor in the chat. Let everybody know that we actually keep our promises around here. We actually do keep our promises. Send an email, support@outlier.com, and we'll shoot you those prizes as soon as we can. JPP won. Congratulations to you. Congratulations to everybody. Ooh, an outlier wrapped Lambo. I like how that goes. I like how that goes. You guys, thank you so much. This has been a super fun time hanging out with you today. But listen, if you're ready to save time, make money, and start winning with less risk, Outlier 4.0 is out. You should definitely go check out 4.0 and click one of these two videos. We will talk soon.